Good afternoon, ladies and gentlemen. My name is William H. Thompson, CPA, MBA, and I am the founder of RE Accounting and Tax Professionals. We help real estate investors maximize return on investment through expert tax strategies, while at the same time helping them to build and sustain a legacy. Welcome to Free Information Friday. And today my topic is going to be not all real estate investors are created equal. Now, what do I mean by that? Simply put, each real estate investor does something different in the area of real estate. One could be a fix and flip, wholesaler, mid-term rental, long-term rental, property manager. Doesn't make a difference. But what does make a difference is the type of entity that you select when you are in fact endeavoring to go into any one of those areas. So I want to give you an example why it's important. Now, most people will think they can select either an LLC or an S corporation for their entity, and both answers are true, but it depends on the type of real estate investor you are. For example, if you are a fix and flipper, you're going to want to form an S corporation. And why do you want to do that? Very simple. To help yourself reduce self-employment tax. What do I mean by that? Self-employment tax? Simply put, it's the Social Security and Medicare that you pay as an employee and employer. Example. Let's say that you make $100,000 net income in the flip and fix business. If you didn't have an S corporation, you would be required to pay Social Security tax on the entire $100,000 net income. However, since you're in an S corporation, you can pay yourself, and you're required to pay yourself, a salary. You don't have to pay the whole $100,000 out. You can pay anywhere from 40 to 50%. That's typically the range that we would fall in. So let's say it's 40%. The other 60% you can take out as a distribution. And when you do that, that distribution is not subject to Social Security or Medicare, or the quote unquote self-employment tax. So right there, by forming the S corporation, you can save yourself at least 5 figures in taxes. So it's a very smart move to do. But on the other side, I would never, or you should never, be recommended to form an S corporation to hold rental properties. That should be done in an LLC. And if you're a single person or it's just you investing, it would be a disregarded entity. Or if you're a partnership, you would be able to file a multi-member LLC. Now, again, both the S corporation and the LLC give you the protection you're looking for, but it's all about the tax treatment. So let's jump back in and discuss why you would not have rental properties in an LLC. One of the things that you would run into, the issue you would run into, is when you wanted to go refinance the property. Typically, banks are not going to refinance a property that's an LLC. So the banker may say to you, well, just take it out of the LLC and put it in your name, and then we'll be able to help you with the refinancing. There's where you're going to run into the problem. And I'll give you an example. Let's say you purchased the property for $200,000 and it's now worth $400,000. And you wanted to refinance, you would, just based on what the banker said, you would put it into to your own name. What you've just done by putting it in your own name, you created a taxable event. So the taxable event is this. the $200,000 you bought the property for and the $400,000 that you're going to refinance for, that's not the whole $400,000. Let's say you're taking $300,000 out. Now you're going to be hit with a gain, a tax on the gain of the difference between $400,000 and $200,000. Depending on your tax bracket, it can vary, but that can be a heavy hit. And most real estate investors would refinance only for one thing, typically only one thing, because they want to get that money out and purchase another property, which is a very smart move. But before you get your net proceeds, you're going to be taxed on the $200,000. That's going to hit your pocketbook hard. So it's very important never to put residential rental properties or any type of rental properties in your in an S corporation. But I recommend all day long, and it's the best way to do it, is to have all your rental properties in an LLC. You're going to get the protection that you need, and it's all going to flow through to your individual tax return. Now, so by the way, the S corporation will flow into your personal too. But for residential rental properties, you're definitely going to want to have it in an LLC, whether it's a single member LLC or a multi-member LLC. Either way, it's very, very important to know what type of real estate investor you are, because it's going to impact the structure that you're going to want to use, consequently impacting your tax and tax strategies. Now, I hope this segment of Free Information Friday was helpful to you. And remember, if you're a real estate investor who wants to maximize return on investment through expert tax strategies, while at the same time helping to build and sustain your legacy, book a call with our firm. And remember, only you can create your empire, but we are here to help every step of the way. Thank you, and I wish you much success on your real estate journey.